and welcome to The Trade. Before we get into the charts that matter, a quick look at what traders are watching. And the US House of Representatives will try to end the longest government shutdown in US history when members vote on this stopgap funding package to restart disrupted food assistance, pay hundreds of thousands of federal workers, and revive the hobbled air traffic control system. The vote expected before midday Australian time, so we're closely monitoring that. And if approved, the funding package would have to be signed into law by President Trump. He said he supports the bill. The FOMC member Raphael Bostic, meanwhile, has announced that he'll retire at the end of his current term in February. He said inflation remains the greater risk to the economy, and he favours keeping rates steady until it's clear the central bank is on track to reach its 2% inflation goal. US Treasuries have rallied, driving yields lower as concerns over labour market weakness deepened after a private survey signalled job softness, boosting expectations for a Fed Reserve rate cut next month. The US two-year Treasury yield around 3.55%, the 10-year yield falling to 4.05%. And the US dollar index down slightly. The Aussie dollar has just jumped on that unemployment rate falling to 4.3%. Let's get across the technicals though. Peter Pan from AC Securities joining me now. Peter, we did see some upside coming through in US markets apart from the Nasdaq. What are the technicals showing you for the Nasdaq 100?
So for the Nasdaq 100, while we have seen as the gold price is climbing, the Nasdaq also pushed higher and reached around 25,700. But when we look closely, the momentum behind that moves appears somewhat weak, not strong enough to break through the resistance convincingly. And this week there is some bad news coming out. Reports said that SoftBank has completely exited its NVIDIA's holding, taking profits after a massive run-up. That has made a lot of traders nervous about a potential short-term correction in US tech stocks, or even fears that the AI bubbles could start to deflate. So from a technical standpoint, the Nasdaq 100 is showing some early warning signs. The price failed to hold above 25,700, and a stochastic indicator is pointing lower from overbought area, which suggests that the index might enter a short-term pullback phase. I'm watching 25,500 as the first key support level. If it clearly breaks through that level, the next logic area will be around 25,000, which aligns with the rising trend line that has been supporting this market since October. So in summary, while the broader trend remains intact, the short-term technical setup looks like bearish. If you want to buy the dip, I would start around 25,000, but not earlier.
All right, what about with our market though? It's been quite a bit of weakness over the last few sessions, Peter.
From the Aussie, Australian stock market looks weaker at this stage compared to the US stock market. Since the ABS has released surprisingly high inflation, the Australian 200 index has clearly lagged behind. As you can see from this chart, the Australian stock index is struggle at the bottom, if not falling further. What is more concerning is that the combination risks of Australia is facing. If the AI bubble burst or the Australian housing market crashed because there may be no further cut for the RBA rate, there will be create a short-term correction for the Australian index. From a technical standpoint, the Aussie index is trapped between 8,700 to 9,000. So if 8,700 breaks, we might see a deeper correction towards 8,000. In my view, this is not a good time to buy Australia equity broadly. If investors really want exposure to Australian stocks, they should stay away from the interest rate sensitive sector like banking or real estate, and instead focusing on the mining stocks, especially for the gold mining and like copper or aluminum, but not iron ore.
So what does it mean then when you say investors should potentially stay away when we look at our market versus, say, the Dow, which has hit a record high?
Yeah. So just after ABS has released a very high inflation rate, the Aussie stock market can't catch up with the US stock market. It is because the RBA showed no potential for any rate cut this year and a low potential for any rate cut next year, which has make a big pressure on the real estate market. If we see those like Goodman, those rates, the stock price has created a big drop in the last 1 or 2 weeks. So in short term, I do still think if you want to buy stock, US stock is the better choice, not Australian stocks, especially after today's better Australian job data comes out. It will still give pressure to interest rate sensitive sectors.
Well, you just talk about that, and we should reiterate there was a better employment jobs report than expected, and unemployment has ticked back to 4.3%. The Aussie dollar had a bit of a spike here. What are you seeing in the Aussie, Peter?
Interestingly, if we talk about midterm or short to midterm or long term Aussie dollar performance, it is not quite much affected by the local inflation data or job data. The movement after the data may only last half an hour or to 2 hours. Instead, it is more broadly driven by another two external forces, the weaker US dollar and the rebound in global commodity price. Those two factors has provide steadily support for Aussies. So if we looked at the chart, Aussie dollar has been moving with a broader rising channel since April, after Trump first proposed the tariff. Then in October, he accelerated another threat for 100% of tariff on China, which has created a short-term correction for Aussie dollar. But further, we may see more support on the long side. The key level to watch is the 0.652 and 0.662. If today there is a good data comes out, if it breaks through 0.660, it may rising further to 0.662 or to 0.668 further up. And the OBV indicator also suggests a long side support. So in short, I think the Aussie dollar is showing quite strength. I will keep long it if it breaks through the main resistance point.
All right, we're almost out of time, so let's quickly go through the next couple of charts you've got. You're looking at gold, obviously holding pretty strong, and also in crypto, Solana here too, Peter.
Yeah. So after gold has already break through for the 1,000 neckline, the trend is going to shifting from bearish to bullish, especially after the US government reopen news comes out. The gold price didn't fall, it actually moves higher. It is a strong support trend. So I will keep looking up because yesterday it has already reached to 4,200. I will keep looking up to 4,300 or to even the highest point 4,400. And for the Solana, it is not a good news because yesterday, when the Nasdaq 100 dropped back after the market open, Solana, Bitcoin, and Ethereum all keeps going down. So I don't think it's a good news for them. And I think after it breaks through 150, it will keep going down to 130. The downward trend line has give a very strong resistance for those cryptocurrencies.
All right, really appreciate it, Peter. Thanks so much. Peter Pan from AC Securities. That does it for this edition of The Trade. Be sure to join us next time.